Let's take a look at this SBA pre-qualified ink and toner e-commerce brand that is making a profit of $1,174,000 a year and recently listed for sale at an asking price of $5,500,000. That is a valuation multiple of roughly 4.7x. I'm going to go through here and cover some of the key details on the listing quickly and then come back and kind of flesh out and share some of my own experience-based insight into these details and ultimately my opinion on this business's valuation, whether or not it is worth the 4.7x valuation multiple they have listed at here. So as we know, it is SBA pre-qualified. They're selling ink and toner. They have a 67% repeat order rate, have been in business for 18 years, have 146 AOV, $146 average order value, and they have a 20,000 square foot warehouse. And I don't know what this means, Circle of Excellence Platinum. Anyways, aside from that last phrase there's a lot to love right here in the title. Okay. They describe it as an SBA pre-qualified e-commerce brand that has solidified its presence in the printer ink market over an impressive 18-year span. The company specializes in the sale of printer consumables, including ink and toner cartridges, through its well-established online platforms with a diverse range of domain assets and a robust product catalog. The business caters to both brand name and generic product consumers, maintaining a strong foothold in its industry. All right, so that sounds like a lot of word salad there just to say this business sells printer ink and toner. Their core operations run from a well-organized warehouse supported by automated systems that connect purchasing, fulfillment, accounting, and customer support. We know they've got the AOV of $146. It's SBA pre-qualified. They've got a repeat order rate again of 67%. We've already covered that. They run a full-scale e-commerce model supported by a 20,000 square foot warehouse, and they've got 7,700 SKUs. All of their marketing has been internal. Their pay-per-click campaigns on Google and Microsoft have been active for years, and they also maintain a recurring email marketing campaign. The best ways to scale that they recommend are through Amazon, Walmart, and other marketplace, and the company sells only through their website currently, and potentially government and school contracts. The company runs with minimal owner involvement thanks to a capable management team overseeing day-to-day operations, and it has a strong financial foundation with a working capital requirement of $400,000 and inventory levels of $900,000 to $1 million. All right, lots to cover there. A lot of it was also touched on in the headline. So let's unpack it all a little bit more here. I'm going to try and get this done in roughly 7 minutes. I try to keep these videos to 10 minutes in length. But it's been in business 8 years, so this is a fairly lindy business. It has been around, and I think is likely to be around for a while as we continue using ink and toner. They've got a big warehouse, so if you're the buyer, you got to be prepared to take over this 20,000 square foot warehouse, and it doesn't say where it's located, but I would say that you need to, plan on living there for the first few months to really get yourself comfortably in the driver's seat. They've got the AOV of $146. I like that. With that AOV, there's enough room there in the product, in the revenue, and likely in the margin to sustain paid ads. I guess we'll talk about the margin in a minute because we haven't looked at that. It's SBA pre-qualified, so that means that they've got at least 3 years of tax returns. And I'll take a step back and say there's really no such thing as SBA pre-qualification. This just means that it is SBA eligible or not disqualified from SBA. That requires 3 years of tax returns. It is not uncommon in the online business world to see these businesses incorporated outside of the United States, so they don't have 3 years of tax returns, therefore not SBA eligible, or they are tied up or kind of part of another entity that runs other businesses, so they don't have individual tax returns. For that reason, it's not uncommon to see them not SBA eligible. This one here has its own standalone books, which means somebody can step in with 10% down and acquire this business. And in this case, that would be $550,000. Am I doing the math on that? Yeah, $550,000. The repeat customer rate here at 67% is nice and high. I like that. The customers keep coming back. They've got 7,700 SKUs. That's, a number that's to be expected with the business model. And they carry inventory of $900,000 to $1 million. Let's talk about the inventory now, because in many cases we see these listings to be plus inventory. We don't see that here. We don't see any note of the inventory being excluded from the asking price. So based on how this is written and in the context of other business listings for e-commerce businesses, I believe that the inventory is going to be included in the valuation. I like that. I hope that is the case. Considering the context of how I typically see these teasers written with the plus inventory and that not being here, I hope that my assumption is correct. It'd be very nice if this inventory is included in the asking price. So I'm going to assume that it is. All their marketing is ran internally. That's good. They don't have an agency. They've got it all, running through their own staff who focus entirely on the business. Because oftentimes when you're running through an agency, they get overwhelmed and they, kind of focus on your business for a few weeks and then they shift their focus until you start complaining. Campaigns have been active for years, so the campaigns have a lot of data built up and they've got email marketing running. I'm going to assume that it's successfully if they've been running it for this period of time. I like this line here, although I didn't highlight it. The business has intentionally stayed in maintenance mode for several years, leaving a significant room for expansion. And then a new owner could quickly grow by listing products on Amazon, Walmart, and other marketplaces. Yeah, that's potential, but it's also probably not an easy win. Otherwise, the seller of the business would have done it. It's not hard to leave the business on maintenance mode and get them listed on these marketplaces, especially when you've got a capable management team in place. Growing it with government and school contracts, the potential, but I think that they're kind of just pulling at strings here. I don't really know anything about how that would be done. Come down to the line here on minimal owner involvement, thanks to a capable management team overseeing day-to-day operations. I would want to focus on how long that management team has been in place. If they've been in place for a few years, or did the seller just kind of put them in place right before listing this for sale? And then we've got the working capital requirement and inventory levels. These are not low numbers, certainly not a drop shipping business, but that's also to be expected for a business that is doing $16 million a year in revenue. And the positive thing behind such high working capital requirements and inventory levels is that it creates a moat. It's very difficult for anybody else to get into the business and compete with you on price if they're trying to drop ship or 3PL it. They can't, because at this number, you're certainly getting nearly the best pricing on inventory. Let's take a look at these numbers here. Particularly, let's calculate out the margin. That is a low margin. We can see just by glancing at the numbers. Business is operating on a 7% margin, so there's not a ton of room here. It's a cutthroat business. On that note, what do I take of the valuation at a 4.7x multiple? Well, they've got a management team in place. They've got a warehouse. They've got the inventory, and that we're assuming that that's included in the business. It's been in business for 18 years. It's in a pretty, tested market, right? Not a tested market, but a market that's not going anywhere. I think that at this 4.7 valuation multiple, if we math it out, it's like 4.684. So I'm rounding it there at 4.7, but I think at that valuation multiple, considering the time in business that it's had, and that you were getting a lot of infrastructure with the business, I certainly think it is worth that. I think it's worth that valuation multiple. I think it is listed fairly if it's including the inventory. If it's not including the inventory, it's going to be priced on the very high side of fair. But that said, this would be a good acquisition for somebody that has not, had a ton of experience in running online businesses, because you can jump in here and there's really not a lot of change that you need to make. And that assumes that this, cash flow is stable. If it's going to be, if the trend of cash flow is stable and you could reasonably expect that number going forward, yes, I think this number is good. Or I think this asking price is good, I should say. If it's declining, then, this would certainly need to be adjusted down. But assuming that things are stable here, I think it is worth that, because as a buyer of the business, you can kind of jump in here, get in the driver's seat, and feel comfortable with the team that you have in place without needing to worry about where your next growth lever is going to come from, right? Like, what are you going to do next to get this business growing? I think this is a established, profitable, and time-tested business that really lends itself to somebody that is not very experienced in e-commerce jumping into the driver's seat. On that note, quick plug here: if you're interested in acquiring established, profitable, and time-tested businesses, you're going to want to check out my Acumen Wire newsletter to newsletter I run, where I send out online businesses that were recently listed for sale, with a focus on established, profitable, and time-tested businesses. I'll put a link below to acumenwire.com. On that note, guys, you know the drill here. Before I sign off, if you found this video helpful or insightful, smash that like button to help me out in the YouTube algorithm. I am calling it a wrap and signing off.